We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button, tell me know you watch this video, helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So the S&P 500 index is what we have in front of us, and we're going to break down some things because a lot of people are concerned about a possible correction, crash, and also seeing things jump up really fast and then things jump right back down really fast on the S&P 500 index day to day, but we just continue to pull downwards. We're going to look at it here with the 42 vision, and we're going to talk about some things that actually lifted off, right, that weight and pressure of a possible crash and why we are in a correction and how this is the beginning of a setup for the next bull run, and this is where opportunities start, right? I talk about this all the time, that investing is not supposed to stop here. This is where it begins, and this is where opportunities are formed. But before we jump into it all, I want to share with you guys the home run opportunities that we look for every single day and that I mentioned this morning over at the Discord. And if that's something that interests you as well, check out the link down below. We look forward to having you join us, and we're going to jump into all the data of the possible downtrend, right, that we could see with the S&P 500 index, the overall markets, and what this means and what the latest news is showing. So the home runs of the day were spectacular despite the fact that the S&P 500 index continues to struggle to get back to all-time highs, but I will continue to look for opportunities like these every single day, and that's what we strive for over at the Invest for Tomorrow community. And if that's something that interests you and you want to become part of, you're more than welcome to join us. I would like to invite you to join us. The link is down below in the description to the Discord, and by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the stocks I mentioned this morning were BMRA, PALT, and GROM. This was our worst performer, giving small jumps of 3 to 5%, 5 to 10%. But let's go ahead and look at these charts here of these home runs. So PALT was one of our home runs yesterday. Mentioned it in the pre-market when it was sitting sideways, started to move up, dipped after the bell, and took off to a highest point from the moment that I mentioned it of 20% plus. Now our other home run opportunity turned out to be a 20% plus move as well, but it was a little bit different, and this is BMRA. It was starting to move upwards towards the bell, and it was just going constantly downwards, but it had pops of 3 to 5%, 5 to 10%, about 3 times here before hitting a bottom and reversing, giving an opportunity of a highest point of 20% plus, guys. And this is something you can become part of as well. Check out the link down below in the description to the Discord, and we look forward to having you join us. Now, a lot of people have been asking questions on 42 Vision and what it is. I do chart analysis with it, and it's an indicator that you can gain access to by joining the 42 Vision tier level. And what it does is bring clarity for me in the charts, right? I could see the dips and I could see the rips, right? And right there where there's weakness and where there's strength, to be able to see the 5 to 10%, 10 to 20% moves, no matter what chart it is and no matter what time frame it is, right? This is based off the 1 minute. On the 5 minute, you could see it, 15, 30 minute, whatever it is that you're looking for. But it allows me to see when things are overextending, going into that shift of weakness and shifting back up to momentum. And that's how I'm able to catch the dips, ride the rips, and avoid those dips that look like a possible dip opportunity and turn out to be the dip of the dip of the dip. And then right there is the reversal again, and you can see the strength based off the 1 minute, the 5 minute, and it allows me to be able to see the 5 to 10% moves, 10 to 20%, and 20% plus moves as well. So if that's something that interests you and you're trying to be able to gain more clarity of what goes on in the charts, quiet down the noise, and be able to focus on maximizing opportunities, you may want to check it out. Let's jump into these charts. So here we are with the S&P 500 index, and we're looking at it with 42 Vision on the 1 week chart. And I got some things to show you guys because we took off major weight, right, off of the whole entire correction slash crash that we're going through right now. And what we might just be in is a correction. We need to watch it, monitor it, because there's so many variables. But one of the biggest ones that could have knocked this down into a crash beyond just a 5 to 15% correction was the fact about the debt ceiling, right? So we have here Congress, right, preventing a government shutdown because Biden signs the bill. That came out yesterday after the Senate passed it, the House everyone passed it, and then they send it to Biden, and I think they came to an agreement. Everybody's happy, but there's still things that they're talking about, and this is a government funded bill until December 3rd, okay? That's where the variables come in. There's a lot of things getting priced into the market, and this isn't really a guarantee beyond that extension. This is just a several month extension. Then we have also supply chain issues, which we're going to go over right now. But what I want you guys to notice is that it says it here, and the key word is shutdown for now, okay? Prevents a government shutdown for now. What happened the last time, and this is why I'm saying that we had a government shutdown and we took off a lot of weight in this correction / crash for now, because what was it? What was it that happened last time? Well, the last government shutdown, which was one of the longest ones, was back in December 22nd of 2018, and it lasted 34 days, okay? And I want you guys to see how the stock market was already getting shaken up, pricing this in, and when it actually happened, what it did, okay? So when we go back to 2018, you could see it here. Things were shaken up back on October, and things started to go downwards. They were kind of leveling off right there in the chart, and then they went down another 10% after December due to that government shutdown. So if we're correcting right now, we're going to kind of level off eventually. We're not going into a crash based off of the technicals and everything in the charts right now, unless there's other variables that just compound into the effect of creating a crash. But everyone and all the experts and all the articles are pointing to a possible correction, which we're in the middle of right now, right? We've corrected about 5% from the top. We've bounced back up, and we're just moving back and forth within that area of 3 to 5% correction so far. Our correction can go all the way towards 10, and I would even extend it to 12 to 15% at these levels of how high the stock market is. But the main thing is that extra 10%, if you would have added it to whatever this correction would be, that could create a crash. We took that weight off for now until December 3rd. So like I stated, supply chain issues are something to be aware of. And it's not just about this article that I'm about to share with you guys, but also in the conference calls, all the companies are talking about supply chain issues overall, and that they're actually making their projections less than what they thought, which then means less revenue, less productivity, which means less growth for companies, right? Due to the fact of these issues. And this ties up with it indirectly in the best way. Shocking cargo ship photos forecast a global supply chain collapse, okay? Quote unquote. So when you go through these photos, a lot of them are showing less workers, they say, and then a lot of them are looking kind of empty. That's really what they were worried about. And then you could see at the ports, everything's just overloaded. It's not moving, empty right there, and just so much concern. They're making it so dramatic, but this is not just about how dramatic they're making it. This is about an actual issue that is affecting revenues and growth for companies because things are delayed. I don't know if you guys have seen, but also the United States Postal Service stated that this Friday, which is today, it's the beginning of October, and it's a whole new month, that they're changing things and they're going to slow things down to be more efficient. That's what they're trying to say that the slowing down is for. It's not really that. It's just that overall, supply chain issues have been an issue all across the board, to the point that it's becoming a global supply chain issue. And it's been going on for a while. And these bottlenecks and these supply chain issues, if you listen, every single company that is a growing company, or even some of the largest companies, and they're already kind of set on a strong foundation of growth, are all stating that this supply chain issue and these bottlenecks are going to affect their revenue and productivity. Now we have here also the 10-year treasury, okay? 10-year treasury has been going upwards towards October, and today's October 1st, and it's the first inflection point since the 29th and 30th of hitting those highs to start pulling downwards. That has been affecting growth tremendously, okay? This is another thing to be watching if it continues to spike up or if it finally cools off, and this is going to allow for stocks to start to probably rally again. So that is something to be aware of, but it doesn't always correlate. These are just indirect correlations, and many different variables come into play to affect the overall markets. This is not just a 1, 2, 3 thing type of strategy. This is everything all across the board. We had the debt ceiling, that was one of them. That's been kind of pushed out of the way. The 10-year treasury is no longer going higher and higher. It's pulling downwards. Hopefully it can cool off. And then now we have the supply chain issues that have been talked about through every earnings call. And the earnings calls that are coming may affect if they continue to talk about supply chain issues, okay? No matter how great their earnings are, everyone's going to be focusing in the stock market, pricing in, right, at this time, what the future projections are for the next revenues and earnings. So that's going to be important as well. Now, we're also in October, which historically is a pretty average month with a typical gain of about 0.4%, going all the way back to 1928. So this is just all across the board, not one of the best months when it comes to investing long term, but there's going to be volatility, and that's where day trading, swing trading opportunities will lie. That's what we look for every single day over at the Patreon, over at the Discord, and with 42 Vision, right, which is the first thing that allowed me to be able to see the transition here of when we started to go into a correction, and it's also shown me the moments where it's tried to bring itself back up but has continued that trend. And that's what I'm going to be watching for, because once that reversal comes, right, from red candlestick to red with green borders back to green, we are starting to reverse and trend back up and get out of this correction. So that's definitely something that 42 Vision can allow me as an investor to see, and you can also have access to it as well. And not only just for the S&P 500 index, it works for the VIX. You can see when things are starting to push back up. You can also see when it's inflecting back down and how the S&P is reacting, as well as all the different time frames and all the different stocks that you're individually watching as an investor. And that is something that you have access to now as well. Check out the link down below, 42 Vision tier level, and you'll gain access to the Discord, the Patreon, and the community itself that is all learning and growing together, guys. So let's look here. What are the possible levels to look at to know where we stand? Well, we've gotten pretty close here to correction mode of about 5 to 10% at 4,200. We're going to have to see if that gets broken through. And then down here at 4,000, right? That would be a complete correction right there. And if that gets broken through, the worst case scenario that we're starting to get into a crash would be down here at 3,600. So anything between 4,000 to 3,600 is definitely an area to see that is still in correction mode, slightly transitioning to a crash, and a crash would be beyond 3,600. Now, a lot of experts are stating that we're just in a correction, possibly 5 to 10%. I could see possibly worst case scenario if everything starts to get back on track and that things start to look at least bright back up to the upside. We went through the tapering and everybody's accepting it in November, and then we go through October, and the only issue is supply chain issues that can hopefully be resolved over time, or new strategies can be applied, that we're not seeing any issues with other variants. And then also the fact that the debt ceiling has been taken out of the way. I mean, I could see possibly a 10 to 15% worst case scenario, and best case scenario is something 5 to 10%, which we're getting really close to as I speak. I look forward to seeing your thoughts down below. And as always, thank you guys so much for watching, and let's make some money.